All right, today's class we're going to be delving into the rudiments of market structure, right? So we call it structure trading, okay? And a whole lot of what we understand as technical analysis is built around the concept of structure trading, because we're trying to find a way to put price into a structured environment. And the truth is that there's a whole lot of structure in the market. And most times when traders look at the market, or new traders look at the market, it's difficult to see that, or it's even difficult to understand or even believe that there's structure in the market. Sometimes it looks like an environment with so much randomness. But there's a whole lot of structure in the market, actually. And that's the reason why when you start to look at the market with the eye of structure, you start to find it, you start to see it. And it's not even that difficult to see, right? So the concept of structure trading comes from trying to understand how to put a predictable pattern into putting trading into a predictable pattern. And we've seen over and over and over that trading is actually very predictable. What happened in the past is likely to repeat itself again. Like we always say, in the market, history repeats itself a lot. So, right? So that's what it is when it comes to structure. Now, when it comes to understanding structure, there are a couple of concepts we have to understand before we put it all together. Okay? And this may be actually a part of the entire classes that we will have on this subject, right? And the first thing we're going to start with is trend, understanding the trend of the market. Now, when you begin to see how trends play out in the market, you start to see, even beginning from that, you start to see structure playing out. Now, if you are in any market or in any field, the way trends work is different from the way trends work in trading. Something might be trending for a long time and it just keeps getting bigger and bigger and the trends continue. And then after a while, it drops off completely. After a while, it may drop off completely and then you don't hear of that trend again. But in the financial market, trends occur in what looks like waves. So it goes up, it comes down slightly, then it goes higher again, it comes down slightly, then it goes higher again, and it comes down slightly. Now, if it's coming down, it comes down sharply, then it goes up slightly, it goes back down sharply, it goes up slightly, then it keeps coming down sharply, just like that. It prints a pattern that looks like that of a wave. So a wave can very well describe what we understand in the market as trends, right? So we'll start with understanding trends. Like I said, there are different parts to understanding market structure, and the first one is trend. Another one is what we call retracement. Another one is what we call reversal, market reversals. And then another one is what we call support and resistance, otherwise known as demand and supply. So when we put all this together, we start to understand and comprehend the structure that plays out in the market, right? So first of all, what is a trend? A trend is a defined pattern of movement. Now, it is the same definition in every place, but the way it plays out is maybe a bit different here than in other places. Okay? Is the general price direction you can see on a chart, depending on the time frame that you're on. So trends can vary widely. It can be a short-term trend. It can be a much longer-term trend. There are trends that be running for years. Sometimes it's for months. The market just keeps doing one thing, keeps moving in one direction. When we go on the chart now, we can see a handful of charts that are like that, a handful of instruments that fall into that category, you see they've been trending for months in one direction. But like I said, even when they're trending in one direction, they do not just go in one direction like that. You can see with your eyes that they're in one direction, but there's always a sell, a sharp sell, a little a sharp drop, then a little rally, then another sharp drop, then a little rally, then another sharp drop, even in a downtrend. In an uptrend, you see the opposite of that playing out, like in the pattern of waves, like I said before. So that's for trends. Then another concept is what we call the concept of reversals. You will see this also within the trend environment. The concept of reversal. Price always moves from one trend to another. So price always trends from one to one. Price always moves from one type of trend to another type of trend. And when price changes from one trend to another, that's what we call a reversal. It can be an upward reversal, it could be a downward reversal, but it's basically a change from one trend to another. It's defined as the turning point to the opposite direction of a previous trend. So when a trend changes to a different trend, that is what we refer to as a reversal, as a market reversal. Then another one we call a retracement. All of these are concepts within the idea of structure trading. Like I said, all of this is what we are going to eventually put together to make sense and start to see that the market actually has a structure. A retracement is defined as a price pullback in a trend, within a trend. Okay. So here's the first thing we look at here. And the first one is what we call an uptrend. An uptrend. Now, an uptrend is basically price moving from a low level, a low area to a higher area. Price is moving from a low area all the way to a higher area. That's what we call an uptrend. But how exactly does that work? Now, when you look at the chart like this, you realize that a chart typically has a low area and a high area. So you have what we call the highs, and then you have what we call the lows, right? Now, when you see that you're on a chart, and you can see, number one, that price is going from a low point to a high point. When I mean low point, I mean this low area all the way to a high point. You can see with your eyes that price is doing something quite clear. That's the first thing. But then that is for laymen. That is for people who are not educated on the financial markets. But when you become educated on financial markets, you start to understand that you can't just see this chart now as price moving from a low area to a high area. Why? Because you are not, your purpose of looking at the chart is to be able to find areas where you might be able to get on the trade. You want to make profit, you want to make money. So this is not just an isolated browsing of the chart. You're not just mindlessly browsing the charts. No, you're actually looking for an opportunity to grab some profit. So for that reason, you have to see the charts a bit differently than the ordinary person. If I show this to someone who's never been in the market, what's he going to see? If you ask him, where is this price moving to? He's going to say, well, from a low point to a high point. But he knows nothing else. Why? Because he's not looking to use it to make profit. But you, as a trader, you're actually looking to use this to make profit. Okay? So for that reason, there are some dynamics we have to understand here. Okay? So the first one is, like I said, the low area and the high area. Now, when you see that price starts to move from a low point to a high point, you start seeing it forming what we call higher highs. Higher highs. You start to see price forming what we call higher highs, then it starts to give you an idea of that you are in an uptrend. Okay, Now, when you also see price trying to form higher lows, it also gives you an idea that you are in an uptrend. Now, look at this. This is a high. We said the high, the top here of your chart are what we call the highs, while the bottom here are called the lows. Okay, all right. Now, at this top here, we have a high. It's a high point, then we have low points below it. But you notice that as price kept on going up, it started forming new highs. And these new highs are higher than the previous high. Why? Because if this place was 1, this level is level 1, this has to be higher level, level 3, level 4. So this area is higher than this area. So now that's what we call a higher high. A high that is higher than this previous high. A high that is higher than the previous high. That's what we call a higher high. Now you see another high formed, higher high again. Another high formed, higher high. Another high formed, higher than the previous high. When you see that, that starts to give you an idea, okay, it looks as if I'm in an uptrend. Then another thing is, what about the lows? Are the lows doing the same things? Let's check. Now we have lows here. Now you see that this next low that was formed is higher than the previous low that was formed before. So that is what we call a higher low. A low that's higher than the previous low. A low that's higher than the previous low. Then you see another low was formed here, and this low is higher than the previous low. Then you see another low. This low is higher than the previous low. So this is what we call higher lows. So an uptrend is basically a series of higher highs and higher lows. An uptrend is a series of higher highs and higher lows. When you see this playing out, that tells you that you're in an uptrend. An uptrend is literally playing out in front of you. And when you're in an uptrend, guys, what you're looking more for is to find quality buy trades. You're mostly looking to find quality buy trades. Now, there are areas where you can sell within an uptrend, but the opportunity usually for those sales are limited. They are limited. They are not as huge as the buy opportunities because there are buy and there are sell opportunities within an uptrend. But the bigger opportunity, the main opportunity of an uptrend is a buy trade. Okay, so when you look at this now, you could have made a buy here. You could have made another buy here around this low. You could have made another buy around this low. You could have made another buy around this low, just like that. But you see, if you enter the trade at any point, theoretically, if you enter the trade at any point for a buy, because it's a buy, you see that you will still get into profit eventually. But if you get on a sell trade somewhere here, you get on the sell trade thinking that, oh, market has turned around, let me get on the sell trade. You will see that this trade will go against you very massively because you are going against the trend. In trading, we have what we call the trend is your friend. We say the trend is your friend. Why is the trend your friend? The trend is your friend because if you go in the direction of the trend will favor you. It will mint you out money, to print you out money, to give you a lot of money if you just go in the direction of the trend. But if you go against the trend, it's like moving against a very heavily loaded train that's on top speed. If a train is loaded and is on top speed, you don't want to be the one to get on the way of that train. It's going to be very dangerous and disastrous. If a car crosses the road at that time, it's going to be a very, very, very terrible disaster, right? So that's what it means when you are trading the opposite way, when you're in a particular type of trend. You're in an uptrend and you are looking for sell trades, it can be quite dangerous to your trading, right? It can be quite dangerous to your trading. Then the second one here is what we call, we're still in structure trading, is what we call a downtrend. A downtrend. A downtrend is very, very important as well, just like an uptrend. In a downtrend, you can see that price is moving from a high point to a low point, from high to low, from high to low. And remember, the tops are still called the highs here. When you come to the chart, the top level is always the high, while the bottom levels is always the sell. It's always the lows. The top levels are always the highs, while the bottom levels are always the lows, right? So you can see low, 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 high, 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 high. So it's always like that, right? Now, that's the thing. You see that we have a high, we have highs, we have lows. Now, but something you will notice is that while this is a high, this is a low, the highs are getting lower. The highs are getting lower. And then check the lows as well. The lows are getting lower. If the highs are getting lower, that means the highs are trending downwards. The highs are moving downwards. If the lows are getting lower, it means that the lows are also moving downwards. So we say that a downtrend is a series of lower highs and lower lows. While an uptrend is a series of higher highs and higher lows, a downtrend is a series of lower highs and lower lows. Okay, lower highs and lower lows. So look at this. The first one to the left-hand side here, what you're seeing is an uptrend. Price trending upwards. So it's moving from a low point all the way to a high point, and it's trending upwards. Uptrend. That's an uptrend. Then at a point, you see that we have a downtrend as well. You see, trend starts coming down. You see, market starts coming down after some time. Then you see price move from an uptrend to a downtrend. So what is the middle? The middle area between a downtrend and an uptrend is a reversal point, a reversal area. Like we mentioned before, we said that we have trends, we have reversals, we have retracements. This is a retracement. This is a reversal right here. So what we're saying is that price move from an uptrend all the way to a downtrend, but the intermediate level, intermediate area between an uptrend and a downtrend is a reversal point. So that reversal point here is what we are seeing right here on the chart here. You see that this from here, price began to change direction, began to change in trend. And we see price move from high uptrend all the way to low, a downtrend, right? So these are areas where you are looking at. When you look at this chart right now, you start to see certain things, coming together, certain patterns, certain structure. So you start to see that there's actually a structure in the way price moves, right? There are lots of other things we're going to see to help us really clarify this and see this very clearly, right? But we're going to see that. But you can already see that price tends to look like it's organized, right? Because it's first of all, you have a trend, you have an uptrend, and an uptrend is moving in a well-defined wave. It's moving like in a well-defined wave. Then it gets to an area, it changes to a downtrend, and that begins to move also in a well-defined, almost like in well-defined waves, right? So price moves from uptrend to a reversal point to a downtrend. All right. So now let's look at this. This is an uptrend. Then after a while, you start seeing that price is changing direction. It changes direction in a certain way, right? Now, normally when you're in an uptrend, you see that price is forming higher highs and higher lows. That's what we said before. Price forms higher highs, it keeps going up, then it forms higher lows. It just continues that way. Okay. And when you are using something like a trend line, you start to see that there's a clear structure in the market like this. If we have a trend line go through this place now, you will see that a trend line could almost perfectly go through this level right here. We can connect 1, 2, 3, 4 by a straight trend line. And then we can also connect 1, 2, or 1, 2, 3, 4 by a straight trend line. That tells you that the market is touching the same area and retracing. For touching the same area, retrace, touch the same area, retrace, turn the same area, pull back, touch the same area and pull back. Continuous. It just keeps going on like that until it gets to a point where it starts to change direction completely. So look at this. This is a low. So price was in an uptrend, then it got to this area here. Last high after considerable uptrend. So price moves all the way to this high, then it starts to gradually shift direction. You see? So it starts to gradually shift character. Gradually shift character. This is a particular character. An uptrend is a particular is an upward character. Then for the downtrend, we start to see it shift to an shift character, shift from one character to another. That's why we call it change of character. It starts to move lower. So you see this is a low here. You see a high, a low, a high, a low, a high. Instead of forming a low and forming another high, what happens? You start to see that price moved from higher, 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 low, higher, 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 low, all the way to now shifting. You see that the highs start getting lower. Why? Sorry, the high starts getting lower and the low starts getting lower. That's telling you that something is happening here. Because remember, that is the character of the downtrend. The character of the downtrend is that price starts to change, starts to move lower, and you start to see a formation of lower lows, lower lows, lower lows, and higher lows, higher lows. Sorry, lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. Okay. Now, when you plot lower highs and lower lows, there is no way there's no way the graph is taking you upwards. It's taking you definitely downwards. You see? So what this is telling us is this. When you start to see price playing out, what we are trying to do many times is try to catch price at around an inflection point. At a point where price changes or reverses, changes from one trend to another. What we are trying to do is if we can catch price around that area, we maximize profit. That's why that's why I said earlier that we don't approach trading like uneducated people. Someone who doesn't know the market at all, you just look at him, says, well, this is moving from point one low to another, yeah, from one low to a high, okay. But the question is, you that wants to trade it, you know that you're not just trying to see where the market is coming from and going. No, you want to ask yourself, where am I going? Where is my opportunity lying? Where does my opportunity lie? On this journey that price is printing, where is my opportunity there? That's what you're looking for. Okay. Yes, so that's the thing. So what we are doing here now is that we see price move from a uptrend all the way to a downtrend. What we are trying to do here is catch a sell trade. Since price is shifting character, what are we looking for? Catch catch a sell trade. So once we enter a trade here, we can see that our stop loss is going to be above this level, while our take profit is probably somewhere down here. Okay. So the same thing happened here for a downtrend. You can see a downtrend is playing out. Price is coming down, 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 down. Then it hits a low point. It's supposed to continue lower because it's a downtrend. But in this case, you see that the formation starts to give you the vibe, the character of an uptrend. And the character of an uptrend is you start to see low prices rising. You start to see a low level that is higher than the low. So you start seeing higher lows, higher lows. You start seeing higher highs, higher highs. That tells you the downtrend is done. That tells you the downtrend is done. Now you should be getting ready to get on your buy trade. And that's why we say buy somewhere here. We'll buy somewhere here. We'll ride it to the top. Ride it to the top. Right? So the next one we're going to consider is what we call support and resistance. That is the third part. There are three types of trends, by the way, because we're mentioning trends. Now we're talking about all the different parts that make up market structure. The first one is what we said that's trends, right? Then we talked about reversal, we talked about retracements in the market, right? Now, the next thing I want to talk about is support and resistance. This is also very, very key. In fact, this is the one that ties it up ties up the structure into a recognizable pattern. Support and resistance zones on our chart help identify levels on the chart where we can place buy or sell trades. In practice, there are two types of support and resistance. There's what we call the fixed type and then the dynamic type. Before we even proceed to talk about the fixed and dynamic, let us try to understand what support and resistance are. So when you come to a chart like this, let's look at this chart. Let's look at this chart now. You see that this chart displays support and resistance. Okay. Now, these are just areas in the market, first of all, where market is making pullbacks, reversal levels in the market. Reversal levels in the market. So price gets to this point, price comes all the way here, gets here, and then changes direction. It gets to a point here, it changes direction, then it comes back to that same area again, and it tends to respect that area. It seems like it respects that area. It recognizes that price had already changed direction there. So what's happening there? What's happening there? Right? That means something is happening there. So it's more like you are in a room right now, and when you throw a ball up, it hits the roof. What happens? It comes down. When you do the same thing tomorrow, it still comes down. Anytime an object hits that roof, it comes down. Anytime an object hits that roof, it comes down. The question is, why is it coming down? Because there is a structure there that's preventing it from going above. Now, in the market, you might ask yourself, is there a structure like this? Well, there are structures like that, but it may not be visible to the eyes just the way your wall and your floor are visible. So here too, the same thing. You see, price tends to respect this low level, and you're wondering what's going on. Is it that it's aware that price is there, or there's a flaw there, or there's something there? Why does price get there and sharply change direction? Why does price get there and sharply changes direction? Okay. So, and this is from the idea of demand and supply. This is from the idea of demand and supply. Usually, when there is a high level of demand, prices tend to appreciate. When there's a high level of demand, prices tend to appreciate. So price moves from lower to higher when there is demand. Think about it. It's the same thing, same way it works in every industry, in real life, in everything you do in life. If suddenly there's a surge in demand, what happens is price begins to rise. And so this is why we call these areas, we call them these verified resistance levels, we call them areas of demand in the market, demand zones. And what happens those happen around demand zones is that a whole lot of traders, institutional traders, money managers, market makers, retail traders are already expecting a reaction from that place. They are expecting that price has gotten here before. This is it. By the time it comes back again, it will do the same thing it did when it got here. Okay? They already can see that. So what they start to do is that they start to pile in buy orders here, buy orders, buy orders. Before the market even gets there, before price gets there, they start piling in buy orders, buy orders, buy orders, buy orders. So once price hits that level, it changes direction very quickly because there are lots and lots of buy orders there. It moves up. Price rises because the demand is very high. The demand is heavy. Price appreciates anytime there is a high level of demand. Okay, and you can see price does the same thing here. It does it here, it does it here. So it does it there. It does it here, it does it here, it does it here. Now look to the top as well. You see the same thing. It's like price knows that price has reversed there before. When you look at this, you look at this, you start to wonder, how does it know that there's something there? Because it's not what you see on the chart, guys, represents the activities of people, the emotions of people, the thoughts of people. If you see fear in the market, it's representing the emotions of fear in the hearts of people. If you see greed in the market, it's a representation of the greed in the hearts of people. So very important. So whatever you are seeing is a representation of how we as humans who are trading are thinking. If I expect price to sell in an area, very likely I am not the only one that expects that to happen. There's another category of people who expect that to happen. So when I'm taking action towards what I believe will happen, there are a million other traders who are doing the same exact thing as me. There's a whole lot of traders, a million, 2 million, 5 million traders who are doing exactly what I am doing right now. So what happens is that becomes cumulative, that brings a cumulative effect to the market. So if all of us are selling, placing sell trades here, sell trades around this area, once we are placing sell trades, we are pouring supply into the market. That's what we call supply. So the area here, the floor here, which we call support, is an area of demand. That's why price rises. At the top there is an area of supply. It's an area of supply. So what you expect is that price is going to start to depreciate from there. And exactly what we see, price starts depreciating from there. Okay, so that's what it is. Now, when you start to look at this, you start to get the idea that there might actually be structure in the market. You see where we're coming from now. We're trying to see put the different parts to market structure together. We started by talking about trends. Now we talked about reversal, retracements, and all that. Now we're talking about support and resistance, which is demand and supply, demand and supply, right? When we start to put this all together, you start to see, we start to arrive at understanding the way the market works in the ambits of structure. You see? So that's what you start to see. You start to see now that what is going on. How does price know that price had gone there before? It's not price that knows. It's just human beings who are trading. Remember, every candlestick you're seeing represents the funds that are flowing out of people's accounts in the market. The funds that are flowing into trades from people's accounts. There are retail traders, there are institutional traders, and everybody in between, market makers and so on. They're all there in the market. You see? And everybody's goal is to make profit. So these areas become very recognizable to market participants. And then it starts to be something that you can bet on. Oh, I'm going to sell here because I know price is going to come down here. Otherwise, how would we be able to have a clear idea of where we should be placing buy and sell from? It will be a total gamble. But it's not a gamble. It's not a gamble because we have a good idea of where market should be going. Okay? Yes, now that's not going to be right all the time. It doesn't have to be right. I tell people every day, you don't have to be right all the time to make money. You just have to make more profit than you lose when you lose a trade. If you enter two trades, if one makes a profit of $10, the other one loses loses you $5. If one loses you $5, the other one makes you $10. You are in profit of $5. It doesn't matter. Loss does not matter if you know what you are doing in the market. If you know what you're doing, a losing trade does not matter, right? So you start to see the structure in the market where you can have a bit of confidence that, oh, if price gets to this point, I'm expecting this to happen. If price gets to this point, I'm expecting that to happen. If price gets to this point, I'm expecting that to happen, right? Okay, so we're going to continue on our next slide. We're going to put this together on the chart so we can look at this very clearly on our next class, right? So this is first of all to help us understand the concepts and to begin to put the pieces together that form structure. On our next class, we're going to be breaking down the structure and using all these tools we've talked about now to begin to chart it up, so you can start to see the structure, and then you can also begin to you can also start doing this on your own on your own chart. The purpose of learning as well in also the purpose of learning mostly in the market is for you to be able to take that information, take that knowledge, and begin to replicate it by yourself, so that you can know in the market, where do I place a trade? Where do I enter for a buy? Where do I enter for a sell? You know, a high probability sell or a high probability buy for me to make profit. Okay. So we're going to end our class today. We'll continue this class on another session where we're going to go down to putting this all together. Do we have a question?